All right, thank you very much. Good morning. Thank you for attending the Remit One sponsored IPR event, Innovation in Payments and Remittances. Appreciate everybody's attendance today. In this session, we'll be discussing remittances in the pandemic age, obstacles and opportunities. I'm Amer Abedi, I'm CMO at Remit One, and I'll be hosting this event. We have an hour and 15 minutes for today's webinar. And for the first 40 minutes, I'll moderate a panel session with my esteemed colleagues here, experts in the money transfer and payments industry, hailing from different regions. And then the next half an hour, we'll take Q&A. There'll be a 30 minutes at the end of the session for Q&A from the audience. So request to the audience to leave your questions via the Q&A button at the bottom of your Zoom screen. At any point during the webinar, and I'll try and see if I can get those questions addressed with our experts here. And we'll try to answer as many questions as we can, at the end of the session. Before we dive into the panel discussion, just a few words about Remit One, who we are, and how we support businesses in the money transfer industry. We at Remit One, we assist a range of businesses, including startups, established money transfer operators, and banks, by providing them with everything they need to start, run, and expand their global money transfer operation. We provide businesses with leading technology, enabling them to run their entire remittance business, enhance customer service, and simplify operations. And finally, we support business growth by connecting our clients to our global network that we have delicately nurtured over the years. I would like to now introduce my panelists here today. I'm very, very pleased, I must confess, really excited, really pleased to introduce our expert panelists here. Mr. Leon Isaacs, CEO of DMA Global. Leon is founder and chief executive officer of DMA Global, the specialist international development company that he founded in 2007. He's a seasoned expert and a business leader in the payments and international development fields with a particular expertise in migrant remittances. He has over 30 years of hands-on experience in this industry. We have Ms. Julie Nyogi, Managing Director of Global Payments and from MFS Africa, Remit One strategic partner. Based in Johannesburg, South Africa, Julie is responsible for managing MFS Africa's global payment and M&O partners. Julie was previously responsible for MFS Africa's Southern and East Africa territory, as well as strategic MTO accounts. And finally, we have Mr. Naved Ashraf, who is head of India and South Asia for MoneyGram International. With over 20 years of rich experience, Naved is the head of India and South Asia at MoneyGram International. Naved is responsible for managing MoneyGram's business for India, Bangladesh, Sri Lanka, Nepal, Bhutan, and the Maldives, key markets, key receiving markets. So obviously a big contribution there. Looking forward to it. So without further ado, let's get into it. The panel discussion starts now. The first question to kick things off is for Leon. Leon, originally the World Bank predicted that global remittances were set to decline by 20% as a direct result of the pandemic. Was last year as bad as expected across the Middle East and across Africa?
Great, thanks. You got me? Okay, thanks, Amir, for that. Good morning, everyone from where I am. I'm sure it's good evening and good afternoon to those in different parts of the world. It's a really good question. I think my short answer would be that the numbers indicate that it probably wasn't as bad as it had been forecast. I mean, I think if we think back to this time last year, things were generally looking pretty grim. We're coming towards the end of the second quarter, which, as it turned out, was the worst quarter by a long distance for pretty much every country. But actually, what we saw was a pretty strong and resilient performance later on in the year, where a lot of the downside that we saw in Q2, which is really when the forecast was produced, actually during the rest of the year, things really recovered in most countries pretty well. So just put it into context, as you rightly say, Amir, there was a projection of a 20% fall for last year. I think you'll all have seen the World Bank then have calculated that actually the fall ended up being on a global basis about 1.6%. So actually much, much smaller than was envisaged, and actually much smaller than even the most optimistic projections that were happening this time last year. So, and I know we'll probably discuss the reasons for that, but just to maybe put a bit of context for Africa and the Middle East as well. I mean, Africa was a really interesting experience, because if you look at the numbers for sub-Saharan Africa, as quoted by the World Bank, they're actually showing a decline of about 6 billion, which is about 13 or 14% on the previous year. But actually, if you then delve deeper, you see that more, the vast majority, or a bigger explanation of that is just one country, which is Nigeria, where officially remittances went down from about 23 billion to 17 billion. If you actually take the rest of Africa, sub-Saharan Africa without Nigeria, there was a slight increase overall. So we can go into the whys and wherefores of Nigeria, but just to say, data for Nigeria has been a very difficult area to measure. And I think the general acceptance is that that 17 billion figure they have is still bigger than the reality. But other countries like Kenya saw a 9% growth. South Africa saw a terrible Q2, but has then seen increased growth all the time. Places like Egypt, 11% up, over 30 billion now, the largest received country on the African continent. Morocco up to 7.4 billion. In fact, the only places that have officially reported numbers that are down will be Uganda and Nigeria. That's not to say other countries aren't down, we just don't have the data. Right. And I think similar picture across the Middle East countries as well, from a receiving viewpoint anyway. So it's a long answer to say to your question. Generally, the official numbers say it wasn't as bad as anticipated in terms of those volumes. I think all the individual stories behind both businesses and the senders and receivers of remittances will probably show you the pain and the challenges, but also I think the optimism and the resilience to really get to the numbers that we saw, which I think took everybody by surprise in the end, much stronger. And this year has continued so far. The early indications are, again, very, very positive. But perhaps I'll stop there and let everybody else have a chance to speak as well.
Yeah, sure. That's really that's great information. Thanks for sharing these stats. I'm sure they're valuable to everybody here, especially our audience. What have been the main challenges during this period? And in your point of view, are we at where you think we should be in terms of recovery? This question it'll be interesting to get input from everybody here. Let's start with Julie.
Yeah, sure. Thanks. So we're a digital payments company, and we've been really fortunate that during the COVID period, we actually were very positively affected. So our transaction values during that period doubled. So, you know, we're really in a good place because our business is completely digital. So in terms of, I don't really have an answer for recovery just because it's been so successful for us.
Right.
But maybe I'll just mention some hurdles that our partners face and that we face, just, you know, being partnered with regulators and remittance companies. So some of the remittance companies that we were working with weren't equipped for digital payments. So they really had some hard times adjusting, and some of them even went out of business, some of the smaller players. And then I think it's also worth mentioning the regulators were a little bit, you know, in the past resistant to cross-border payments, but they really adjusted so quickly during this time by doing things like waiving transaction fees, allowing for larger limits, even encouraging interoperability, for example, in the CMAC region, so the Central African region, launching GMAC right during COVID. So yeah, there's challenges, but I really felt like besides ourselves, we had a lot of our partners really thrive in that time period.
No, thanks, Julie. Thank you. Naved, do you want to add to this from your perspective?
Sure.
The challenges during this period? Yeah.
Sure. So if you look at what happened last year, I think it was like not only MoneyGram, right? Because it was a global thing, and during April and May last year, it was like doomsday, and it was like a abrupt business decline that we saw. And everybody knows the reason. It was because of job losses. It was people holding back on remittances, sending lesser amounts back home, retail locations being shut, curfews, etc., across the globe. And also it all led to reverse migration as well. People started coming back home, and we thought that this is something which is going to stay. How long it's going to stay, we didn't know that. But we are lucky. I would say that the recovery was faster than we anticipated, and I completely echo both Julie and Leon's inputs on this. The green shoots were visible from June itself last year, and there were various reasons to it. Obviously, there were government support which came in from a lot of governments across the globe, especially from the large SEN countries, in terms of wage subsidies, unemployment benefits, job supports, compensation for self-employed, taxes, etc. So all of this also led to people sending back money home where their loved ones or friends needed it. And like Julie mentioned, digital. So MoneyGram is a hybrid company. We have both physical locations, and we are really doing really well on digital now. People woke up to digital during the pandemic and started sending more money. They really searched for what were the options and found that digital is the option, and they started using it. And companies had to ramp up on their digital stack, mobile wallets, websites, etc., etc. So I would say it's been a complete recovery as far as the retail is concerned, a little better there. And the cash walk-in business has really come back and gone beyond what it was during the pandemic. But the digital business, which was growing even before the pandemic hit us, that has really accelerated. And you would have seen that MoneyGram has been reporting a triple-digit growth for a long time now, month on month. So yeah, that's it, I would say.
So some retailers have been prepared for this. Some big players. Do you think it came as a shock to some of your competitors? Like in terms of, how I mean, I understand that COVID came as we knew about COVID. We knew that the lockdown will be coming soon. I just want to understand that MoneyGram has realized great success on the digital side. In terms of numbers holistically, not just specific to MoneyGram, but in your experience, in terms of numbers, when you have channel cannibalization, you have traditional remitters moving to digital remittances. Remitters meaning people who are sending money, right? The migrants. So have you realized that new remitters are joining these big companies to send money? Or is there just like this massive shift from traditional to digital? If you know what I mean. There's no channel, is there channel cannibalization happening here? Or is there just more people making use of remittances as new remitters coming on board?
Yeah. So as you know that India is the largest remittance market in the globe, right? And we have seen that a large chunk of it comes through account deposits traditionally. That has been the norm for India. And during the pandemic, what happened was that whatever partnerships MoneyGram had made with a lot of mobile operators across the globe, as well as account deposit partnerships, they really took off, right? Which were dormant earlier or doing lesser business. So it's we know for a fact that people who were using physical, obviously some of them and a lot of them moved to the digital. At the same time, people who were using banks moved on to this mobile-led transfers, right? Because they could download an app or just log into the website and send to the receive country in a jiffy. So that is, I think, what really started that and accelerated that. Also, the digital stack is something that we have been working upon for a long time, right? It was there, but obviously it took off during the pandemic.
Yeah. Okay. Great. Thank you. Leon, do you have a comment on channel cannibalization? Do you have any stats do you think there are enough stats, enough data out there in the market that our audience can access? Leon, you're on mute.
Yeah, sorry. I think the short answer is no. I'm not aware of any or publicly available figures on this in this area. I mean, obviously the companies concerned will have their own pictures of what they're seeing, and I think, you know, probably a couple of points I would make is obviously the shift to digital has become very pronounced. I mean, COVID was such a catalyst for that. But I think probably a couple of points I would make. One is that the money transfer companies, with their definition of digital, often means digital only needs to be at one end of the transaction, not as a straight through transaction. So the numbers we actually see reported, we should be quite careful that I think many of them are now saying around 30% of their business is happening digitally. But that really means it's at least one end where it's digital. It may not be the other end. And I think we should still be, despite all of the interest, which is great on digital, still more than half of transactions involve cash as a key part of the transaction. But having said that, I think the shift has really started, which is good. But from a data viewpoint, I think the way we're going to get that is through basically surveys, which would have to be conducted by governments or international bodies to help bring the development on. The individual companies have clearly highlighted where they've seen changes within them. And my understanding is that this is not cannibalization. This is actually new customers to those businesses. Right. Yeah, in most cases. And I think that's really interesting. And part of the question, and I'm sure we'll discuss it later, is, you know, one of the things it's assumed, and I think everybody takes it as a fact now, although it's not been proved, is that the informal market has really suffered worse than the formal market during COVID. And so I think it's quite logical that actually a lot of people who used informal would probably have used digital, because actually in many cases, we know in a lot of the markets, people are sending money using somebody else's digital account to send money or collect money, or somebody else's bank account and so on. So for them, it's probably actually an easier switch to use a formal service. So sorry, I don't have any data, but I think the general feeling at the moment is that this is not a cannibalization. This is actually people who have a need to send money using a new method generally.
Okay, great. Thank you, Leon. Julie, question for you. Interesting to get your take on this. Some businesses have thrived during the COVID period. What do you think their differentiators have been to insulate them from your perspective?
I would say agility. And I think Naved's example is really great with MoneyGram, because MoneyGram's one of our partners, and we were kind of struggling to convince them to focus on mobile money here in Africa. And as soon as COVID hit, I mean, we basically, our partnership just, skyrocketed, because they were really open to changing the way that they thought and worked. So I think that's a big thing. And I think I'll really echo what Leon said. It's really just, the fact that people, the people who were in the informal market that had resistance to digital payments, that barrier is now gone. So it's actually pretty exciting that now, once you've tried it, hopefully that you become more used to it and use it. So I really think it's agility. And I think, the people that really benefited are companies that were already in the digital space. And then I would say, thirdly, just being on the right side of what the regulation is. So, if a central bank says, okay, now you can do X, and you were already doing X, you could benefit. If now you had to change your model, your commercial model, your fees, and you weren't agile, or you didn't have the technical capacity to do, to make those changes quickly, then it really would be a barrier to thriving in that period.
Thank you. Leon, Naved, what shifts have you seen, and what do you think will stick in the long term now? So new shifts, long term, where do you see this industry headed?
I think, good question. I think we've already talked about digital a bit. I think that's definitely here to stay, and we've probably had a 2 or 3 year acceleration. It's the new norm, but also I think what that means is that digital as a channel is there, so it doesn't just have to be remittances that are being pushed down. It can be lots of other financial services to this customer group that in some cases was not able to access mainstream financial services. So I think this is sort of the seismic shift that everybody's been waiting for. I think I mentioned informal as well. I think that's a bit more debatable as to whether the changes, the people who are now using formal services but were using informal will stay. But what I do think is that, and I'm sure in some areas where the informal was based on cultural norms and community pressures, there may be a need to go back to that. But in most cases, actually, I think what it's done is demonstrated to people that there are other alternatives that they can access that are actually quite relatively easy to use and have as many advantages that they presumed they couldn't get before. So for instance, you can now get money into much more remote places, the speed it goes and the certainty is all there. But I think some of that will undoubtedly shift back. Pardon me. I think the other thing around the informal piece is really whether there's a means, and I think it's a challenge for regulators, to design policies to allow some of those who are operating informally because they didn't meet certain criteria to enhance their programs and actually come into the formal business as well. So I think that's another area to look at. Data, I think historically remittances have generally been viewed as a transactional business. So people have not, although they've had they haven't often had the systems actually to manage clients as long-term relationships. I think that's now changing. I think one of the things we've really seen with digitization is starting of a much better understanding of customers, what their needs are, et cetera, but also really trying to get more intimate with individuals to design programs for them. So I think that we're just starting to see that. It's still embryonic, but I think that's one of the shifts that has come as a benefit of digitization. And then finally, perhaps for all of us, and Julie alluded to this earlier, is that one of the things I think COVID really did was it brought policymakers and government's attention back to remittances. You know, if you remember 10, 15 years ago, there was this awakening from governments as to the importance of remittances. There was a lot of investment. There was a lot of focus on pricing. And then it sort of gradually dwindled as things became more normal during the 2010s. But what COVID's done is it immediately put remittances back into the government's mindsets because these flows were still running when international investment and so on wasn't. So they've started to look at how can we use remittances again, but what help can we give to the remittances community and the migrants to actually make sure that the flows keep flowing, but they're improved. So for me, that might be one of the best longer term benefits. So
that's really interesting.
I'll stop there.
No, thank you. That's really interesting. I think you raised an important point about the informal sector. It's not something that we talk about. I mean, informal sector is much bigger in terms of, obviously, I mean, World Bank data. I mean, even World Bank, there's a disclaimer that says they're not sure how big this industry is, the informal sector. But we can only estimate that it's, you know, it's at least several times bigger than the formal sector. And now with everything going digital, with post-pandemic, you know, in this post-pandemic era where digital is the new norm, as you said earlier, I mean, some of the steps that fintech companies like Remit1 are taking is we're helping clients, you know, players from the informal sector get licensed. So we're bringing them into the formal fold, if you will, right? And you know, we take them through the licensing process, get them, you know, and basically provide them with a digital platform that's AML compliant and all that. These are some of the things that these like smaller fintech companies are doing. Naved, what do you think these bigger players are doing? Big players, the established players in our industry, what steps are they taking to tap into this informal sector? It'd be interesting to know if we have any data on this.
So, Amir, I can talk about the region, the South Asia markets. So, the informal sector used to be a big market some time back. I would not say it's the same now. The rise of organized remittances has really taken over, and I think the biggest part was the reach. And as far as the number of locations, etc., are concerned, the bigger players are across the nook and corner of the countries now. So the people who used to rely on somebody delivering money to them anonymously, etc., that's really stopped. Uh, some of it still exists, and mostly to basically this is working still on relationships, and this is what we know. Quite a few of the formal market is obviously being used, right? So it's like somebody sending to somebody, right? And he in turn delivering to somebody else, right? So that's what's happening. But obviously there are still all the KYC procedures being followed, all the documentation, etc., is collected. But there is nothing that we see in terms of informal market being big in South Asia now. That used to be the case almost, I would say, 5 to 7 years back.
Really?
Yeah.
Is that the same in Africa, Julie? Do you see a similar trend happening there?
It's hard
In
to
terms
say
of
from
yeah.
Oh, sorry, go
Sorry,
ahead.
go ahead. No,
I
mean, is it?
okay,
Yeah,
go ahead.
sorry. Yeah, go ahead. Sorry.
I was going to say it's hard to say in terms of when I'm wearing my MFS Africa hat, because we only are working with regulated entities. But what I can say is that shift that we're talking about towards mobile money usage, because, and especially during the COVID period, we actually look at the amount of users that we are sending to. So both on the sending side and on the receiving side. And the actual amount of people that we're sending to on the receiving side has increased in all of the countries that we do business in. And I think that's the whole question of, maybe I can give you an example. There are a lot of countries in Africa where people will save money by putting, storing money under their mattress, or traveling from South Africa to Zimbabwe with cash in their shoe. These are things that, we as a company, and I think as an industry, digital payments, is that, we hope that that's not the case. It's not as secure, and there's many other reasons why we don't advocate it. So I think that the growth has has definitely increased, and I'm just hoping that it'll stay that way.
Right. As agility, terms that you use, these are very valid terms, very good terms, powerful terms. Interoperability. As interoperability increases, there is an increase. So by interoperability, what I mean is, in a receiving market like India or Zimbabwe, for example, the ability for MTOs and MNOs, so that's money transfer operators and mobile network operators, to work together, that should help bring the untapped sector into the formal fold, right? Because the informal sector largely uses mobile phones, but like you said, they use cash, at the same time. But if there's a way that they can, when they realize that cash can be translated into a mobile digital wallet in some way, and this digital wallet, can be used to send money to other mobile phone users from other MNOs, then you are strengthening, our sector. You're bringing new customers into the formal fold, and so there's no channel cannibalization either, and you're tapping into the market, right? You're expanding the market. You are giving these individuals a chance to climb onto the financial ladder. That's where a lot of innovation is happening. So I think a lot of innovation is happening in receiving markets, and that's forcing the sending markets to adapt as well. I mean, what we're seeing, just a comment here, is there's this drive to go not just digital. They want, MTOs from receiving markets are coming to the UK, and they want to apply for e-money licenses. And the reason why they want to do that is so that people here can send money directly to the informal sector right, and help them climb onto the financial ladder. And if the receiving sector has a mobile wallet on their end, which is happening, Latin America is a case in point, you know, um, and Pakistan as well. We have another session on Pakistan. We'll talk more on this, but then that helps the flow. You're actually making everything digital from sending side to receiving side. So this trend is important and it's emerging and we're seeing it actually. Any comments here from Leon and Naved as well on what I just said? Any thoughts?
Yeah, I mean, I think you're exactly right that interoperability, I think, has now become more important, but actually not so much between people providing the same service in different countries, although that obviously is still important, but actually between different methods and different products out there. So for instance, between remittance companies being able to credit bank accounts, we're seeing a big increase in that. The whole mobile space, you're exactly right. It's allowing non-bank financial institutions to participate in mainstream financial services, I think, is the biggest win we can get from interoperability. And then I think the second part of that will be them making that on a regional basis, particularly in receiving areas. Because we know, I take Africa as an example. There's a lot of countries with different sizes at different stages of development, but actually being able to move money across borders is extremely difficult. But if you can put together what systems exist now, then across different types of services, you can move money where it needs to go with different allow customers to access different types of products much more quickly than building something yourself from scratch or just on a country by country basis. So I think you're right. The interoperability piece for me is a real change we're going to see accelerate over the coming years as well.
Yeah. I think is Naved here? Sorry, I think we lost. We'll try and get him back online. Sorry. Julie, question for you. Is the usage of digital payments versus cash, physical methods, sustainable post-COVID? We have addressed aspects of this question, but it's a question that's being posed by many people in the industry. So your take on this?
Yeah, I mean, I want to say, yeah, definitely. I want to say yes. I think what we talked about before is the barriers. And I think in my experience in Africa, the main barrier for using digital payments was trust. Maybe also some, each country is different, but I think that would probably be like the main one. And once you get over the trust barrier, you can start using it and realizing that it's trustworthy and it works. But there are a lot of other barriers. And for example, especially in certain African countries where cash out fees are really high. And or for example, wallet sizes are really small. So countries like Kenya, Uganda made adjustments during COVID. Now, if they revert to the old ways, if the cash out fees go up or if the send fees are re-implemented, then it's hard to say, how sustainable it is. It really depends on how, and I think someone in the chat pointed this out, is how the regulators in the receive countries are responding. But I'm very hopeful that it is sustainable post-COVID.
Optimistic. That's great. That's great. That's what we need. Naved is back. Great. Naved, can you hear us? You're in. Naved, can you hear us? Yeah.
Yeah. Sorry, I have some technical difficulties. I'm not able to hear you guys.
No issues. Great to have you back. Naved, question for you. Is the usage of digital payments versus cash sustainable post-COVID? Your take on this? I think we're having some technical issues. We'll move on to the next question. Leon, one of the most important questions, I think, from our audience's perspective here. In your opinion, Leon, has the bank account situation improved with the drive to go digital, or are we in the same situation as we've always been?
Yeah, thanks for that, Amir. I'm sort of fed up of talking about this now because it seems to be going on most of my adult life, really. I think the thing is, we thought that more digitization would help. From what I hear, it's not making a sufficient difference. There are still lots of companies that are having real difficulties, particularly actually the newer technology companies having great difficulty in getting accounts. And this is not just a UK or a Europe issue, it's happening in most parts of the world, really. So I think in a way the discussion around it has moved, from a business model where there was lots of concerns around the risks associated or the perception of risks in money transfer companies. That's still there, but then it's just morphed into around cryptocurrency and a lot of the newer initiatives, new techs that are coming on. I think what's concerning for me is that, and generally, I guess this is just my personal view, there doesn't, from a government level, things were really bad and there was a lot of attention around 2012, 2013, and there was sort of concerted efforts. At that period, many companies lost their accounts, and I think governments were really concerned. Then things sort of, let's say they hit a plateau and they didn't get any worse. And so attention came off it. If you look, I was on a webinar the other week where we had some of the main international banks, the ones based in New York and so on. And their general view was that it was a problem that was solved. It wasn't a problem that was really there anymore as far as they were concerned. And that concerns me, because if that's the view of the people providing the services, it's more driven from the fact that I suspect they're not getting so much pushback from governments and others about the challenges. So for me, it's not really solved, and it's only going to get solved if governments are prepared to take action. And I think governments are reluctant to take action, particularly given, the dichotomy or the perceived dichotomy with KYC, etc., which is what's being used as the reason for not having these controls. And it's actually where digitization should help, because we bring much greater transparency and control and the ability to identify people. So sorry, a long answer, but hopefully at some conference in the future, we'll be able to say it's not an issue. It was an issue of the past, but from all the feedback I get, it's still very much an issue.
Right. And okay, but so.
Sorry, Amir, I'm back.
Yeah, hi, Naved.
From my mobile now.
No problem. Great to have you back, Naved. Same question to you. And then, I think this is an important question. I know most of my clients, this is the question they ask first, even before they talk about technology. Did you get to hear Leon's response, Naved, so you can follow on?
No, sorry, Amir, I missed the question. So.
Oh, you missed the question. Okay, sorry, my apologies. Okay, I'll repeat the question. Has the bank account situation, in your opinion, improved with the drive to go digital, or are we in the same situation today? Yeah.
Okay, so the availability of the bank accounts is what you're asking? Okay, so again, I'll come from a South Asia perspective. So the bank accounts in India are largely government driven. Most of the initiatives—
Bank accounts for MSBs, Naved. Sorry, I'm referring to bank accounts for MSBs, yeah? Money service businesses, so like MoneyGram, Ria, Western Union, that are operating in India, for example. Yeah, it's difficult to get bank accounts, right, for MSBs. The big players aside, if you're looking at smaller MSBs that are setting up in India, for example, they would struggle, right, getting a remittance bank account with RBI.
Yes, so regulations around that are difficult. It's not easy. It's
Yeah.
not easy, but yes, it's easier for the bigger ones. So if you're a small company just looking to start off, I think it's a little difficult, but it's not impossible. You obviously have to work a little harder than the rest. So I would say that the situation is that the government is supportive, but sometimes the rules are such that they have a lot. There's a lot expected out of them, and sometimes you need that push, that extra push, to enable these smaller players to basically come into the mainstream.
Yeah, no, thanks, Naved. It's a question for Leon. It's a question for all my esteemed panelists, actually. So I agree with what Leon said about digitization. Logically, if I think about it, the ultimate responsibility of bank account provisioning rests with the regulator, i.e. government, right? It's not the bank. The bank should follow directives set by the regulator. The regulator is reluctant because they don't have full KYC AML visibility on MSBs. So what they do is they pass the buck. They pass the buck on to the bank. The bank says to the MSBs, I'm not going to give you a bank account for XY. Well, they'll cite compliance, they'll cite, AML, KYC issues. But when we have the technology and we're proving that the technology is there, then, why aren't the government stroke regulators doing more to put pressure on banks to help sustain the industry? If these MSBs go out of business, then you're going to end up with just just very few players, and then you have this issue, right? Monopoly in this great industry. And yeah, so why, is this a trend across the board, Leon, in your opinion, on all the continents, or is it specific to Europe, North America?
Well, yeah, I
The
mean,
inaction from regulators. Yeah.
Yeah, I think the thing, I suppose, if I was to look at it from a regulator's perspective, there was a lot of people looking at it 7, 8, 9 years ago, and regulators and governments took a strong interest in it. I think actually, because the situation, let's say it's stabilized, it didn't keep getting worse, that governments have said, we've got so many things to manage, we're going to look elsewhere. And in reality, there was probably 1 or 2 corridors, maybe a handful, where actually services became unavailable, and they worked to try and resolve a situation there. But in most cases, there were less operators and there was consolidation, but it didn't actually stop operating. So I think for regulators and governments, their view was, okay, it's not a great situation, but we've only got limited amount of resource. We'll have to look else. We'll have to look at other things, and if we'll monitor it, if it gets much worse, we'll come back in. I think in answer to your question, is it everywhere? Yes. We've just been doing some work in the South Pacific with these, Pacific islands, relatively small populations, but high importance of remittance flows. And, we've had a situation there where I think 3 months ago, maybe, the governor of the Reserve Bank of New Zealand issued effectively a public appeal to the banks in his country not to close accounts of remittance companies or to find ways to keep them open, which I still find strange why he couldn't actually force them, but they're trying the persuasion piece. Right. And I think it's happening everywhere because at the end of the day, most banks want to or need to provide US dollars to their customers or deal in US dollars. And if they've got to do that, that means they have to have some form of correspondent relationship ultimately with the big banks in New York. Even if it's through 2 or 3 steps down the chain, they're going to have to deal with those banks. And those are the banks that are setting the standards, I guess, driven by US policy, but also other reasons. And so because everybody wants to deal in US dollars at the moment, all countries are affected. So, there was talk actually about, well, maybe remittance companies can only deal in euros rather than dollars to avoid that, which you can do if you're very localized specific corridors, but you can't do on a global basis. But there's been talks about using Chinese currency and so on as well, which clearly the way international currency markets work is not going to be realistic at the moment. So I think it's still ongoing. Anything that touches the US dollar, it's still going to be whatever country you're in. And we know the big problem is that in parts of places like Africa, a number of the banks are losing their correspondent bank accounts. So it's not just the money transfer companies, it's actually the banks. And even in Europe, you probably saw, in Malta, I think it's virtually impossible for any of the banks to have any correspondent accounts at the moment. So it's not just for remittance companies, it's for everybody. This is still a big problem that's not going to get solved anytime soon, I fear.
So Leon, is this a good case for cryptocurrencies?
Well, look at the
I'm only going by what you just said.
Look at difficulties. I think somebody else should come in here because it's not my area of specialty, but you look at El Salvador, they want to bring in acceptance of Bitcoins. I know Bitcoin's obviously not the only cryptocurrency, and the World Bank has turned around to them and said they're not in a position to help them at the moment because they've got so many concerns about it. I mean, I think cryptocurrencies, you're going to come into the same regulated area, but undoubtedly there's a lot of potential for helping remittance companies to settle much more effectively, to get money where they need more quickly, and ultimately, hopefully, for keeping costs down. But I think the challenge is, if you look at the international environment, you've got a lot of countries now, I think it's over 100, looking at central bank digital currencies or investigating. So digital currency per se should be a major boost here, whether it's independent private cryptocurrencies as opposed to central bank digital currencies. I doubt that we're going to be able, the problem is you start using them, and there's been companies that were using these for a while, show good benefits to their customers, but then found the regulatory environment was totally against them. So that would have to change in tandem with the growth in product usage.
But there is something happening. Like in Africa, I know a few nations are actually on a regulatory level, on a government level, central bank level. They're talking to the likes of Stellar and Ripple, etc., and what have you, right? To help address some of these issues that you pointed out. Okay, great. So what next then in terms of opportunities that lie ahead for both traditional and digital MSPs post-pandemic? A question to all my esteemed panelists here. Let's start with Naved. What next in terms of opportunities for both traditional and digital MSPs? How's the future?
Amar, we touched upon the Bitcoin piece, right? So Bitcoins are not legal tender yet, as we know it. It's quite popular, but it's not legal tender. The central bank digital currencies are obviously blockchain based and digital tokens, etc. And that's basically used to combat the growth of too many cryptocurrencies, right? But no bank, as of now, as far as I know, has launched the central bank-backed digital currency. I think the way forward could be blockchain, right? Because many banks and private companies have set up innovation divisions and innovation labs, and they're seeking proof of concept, etc. But the biggest factors for digital for blockchain adoption would be standardization, because there's Swift, which is like a standard, but there are other agencies also getting set up, and once that comes in, I think it will bring in a lot of standardization across the board. Also, we'll have to do away with the multiple layer of banks right now and the lack of transparency from the moment of money. Need to work upon the data protection, the security piece, and also a lot of collaboration is required between the TSOs and the interoperable blockchains. So I think this is something which is the future. But right now, I think the only way the current, what I feel has to do well is the technical innovation bit. And right now, as the business is going, it's not just the IT department's responsibility of bringing in all the innovation, right? It has to be a more comprehensive approach, and innovations need to be across the board in terms of either APIs or leveraging AI or cloud, eliminating the paperwork, um, and accelerating the real-time payments is, I think, the key. Because once that happens, it's the survival of the fastest, as I call it. So, and customer, we can't obviously forget the customer. So whatever apps and websites we're using right now, they have to be more, I would say, customer friendly in terms of navigation, design, etc. And there has to be a personalized communication with the customers, both on the social media as well as one-to-one, and customer retention. So it's like a cultural shift we'll have to look at in terms of the companies are trying to adopt a startup approach, or I would say a customer-centric mindset, which will make them more nimble and agile. I think that's the way forward.
Okay, thank you. Thank you for your input, Naved. Valuable. A reminder to all our attendees to post questions using the Q&A button that they see at the bottom of the screen. Some questions have begun coming in. Let me read a few comments and pose a few questions from our audience. Julie, a question for you. In Kenya last year, Safaricom waived fees for M-Pesa transactions below 1,000 to help people and SMEs. A point to note, last year, Kenyans transacted 4.4 trillion Kenyan shillings. Also, they have secured licenses in Ethiopia, which has a population of 100 million plus. I believe the future is bright for mobile money, and still there's much untapped resources in Africa. Any comments, Julie? This is addressed to you.
Yeah, I mean, I totally agree with that comment. And I think I feel like I keep bringing up the regulators, but the regulators have really changed in my experience. I mean, even from small things like being able to meet with us over Zoom calls, where normally we would have to fly to have in-person meetings, the regulators have really come to the playing field. I think one comment I would just add that I think is important is, I think it's our job for people who are working with regulators to make them familiar with the services that we are working, whether remittances or payments, whether cross-border or domestic. They just need to kind of understand, and sometimes be explained in different ways and several times sometimes, just so that they can feel familiar. And you know, you see this in Kenya and actually just recently in Uganda. It was announced that there's going to be a sandbox, so a technical sandbox where you can that's being pushed by the regulator. So I mean, we really have to work together with regulators, and I would say if they're not, you know, convinced about cross-border payments or digital payments, it's our job to help them understand. Yeah.
That's a good point. Education. Yeah, that's a really good point. Another question, it's more of a comment, I think. Let me share my experience as an IT service provider for money transfers. We're seeing a growing interest in the implementation of money transfer systems from central banks in our region, which is the CIS region. They're becoming active participants in remittances, not just regulators. So that's an interesting trend, yes. And as a Remit One, part of our business is to provide technology. We are an IT service provider ourselves, and I can fully concur that we are also talking to central banks. There is interest in central banks, from central banks in using software to track inward and inbound and outbound remittances. Yes, we were experiencing the same thing here. So the future definitely is bright. There are a few questions on stable coins as a way of settlement. I think these questions obviously were spawned by the discussion Leon and I had earlier about this. So I just wanted to, I wish I could answer this question, or we could answer this question more effectively, but there is a separate session on, you know, addressing stable coins and cryptocurrencies, etc. The session, you know, at the IPR event. I will request my team to send you the schedule, you know, of panel sessions. I know we have a few sessions today and a few tomorrow, and we have a session on digital and cryptocurrency as well. So hopefully, you know, this question will be addressed there. Next question an interesting one. Have you seen increasing digitization, any cost advantage being passed on to end customers due to channel efficiency or process efficiency? That's a very good question. Anybody, any takers here? Open to anyone. It's not addressed to any specific panelist.
Julie, looks like you're ready to go. I'll come in after you.
Yeah.
Sorry?
Okay. Yeah. So actually, I'll mention two of our partners that participated in this. So during COVID, when you know, in the heart of it, I would say, Airtel, one of our termination partners into Africa, lowered their fees. And they wanted to make sure that the senders, so let's say the money transfer companies, that, well, first of all, that MFS Africa was passing on these savings to our sending MTOs, and that the sending MTO was passing on these savings to their customers. And once, you know, everyone in the chain agreed to pass savings on, we actually saw a huge uptick in usage from the money transfer companies into the Airtel wallets. So it really did work. That was the only MNO that participated and actually came up with the idea. But it really did help, and it was a pretty cool test as well.
Yeah, maybe just to add, perhaps from a global perspective, because I think it is a really good question. I think the World Bank has just started producing, as part of its remittance prices worldwide database, a split out of digital costs compared to cash. And what we saw actually was all costs have declined a little bit in the last 12 months. So the current price is 6.38% on average to send $200 across 367 corridors, regardless of the type of service. But if you then split that out, you see that the cost for digital is around 5% and the cost for cash is 7 to 8%. So I think that on its own is proving that digital prices are lower than cash prices, which is what we all intuitively know, but I think that shows that. Further, the GSMA have done some research over the last few years on mobile specifically, and the last survey they did on pricing, which was in Q3 of last year, came out with a price of 3.53% as the average cost to send mobile payment from mobile money to mobile money. So I think even from those examples, you can see that the market is showing a difference. I think what we're not necessarily seeing throughout is actually much lower costs, or costs coming down when methods change, but generally they are. You just look at the difference of companies that offer multiple services. There is now a lower price to send digitally than there is for cash across the board, really. So there is definitely, we are seeing a positioning price that's different. What relation that has to costs, we assume there is a direct correlation, but that is an area that needs further investigation.
I think open banking as well, right? So you have with open banking, there's a new breed of players that tap into the open banking network, and they're able to offer bank account to bank account transactions at reduced rates, giving the payment gateways a run for the money, right? So that's also helped. I think it is helping. I think the data is. I think we'll have to wait for a few months before we get hard data available. But yeah, we can see there's this big trend by Europe and UK-based MTOs moving away from payment gateways to open banking solution providers that tap into the network and offer debit card transfers at much reduced rates. So otherwise, it just becomes unsustainable for especially smaller MTOs. So there is a session, just confirming, there's a session covering cryptocurrency today at 1:30 p.m. UK time. That's GMT +1, so 13:30. That's 1:30 p.m. UK time. It's called New Tech in an Old Business. Explore the new products that are redefining the best in class. So hope this helps the questioners. Okay, so then finally we move on to our, I was saving this comment till the end. We've got about 8 minutes left.
Amir, so just so you know, on the Q&A session, there's some other questions I see. There's 4 questions, which maybe you want us to answer or maybe not.
Sorry, did I miss a question? Sorry, Leon.
Well, I think you're looking at the chat, but there's also the Q&A button where there's some other questions.
I'm looking at that now, yeah, thank you, yeah. So what would be the future for the remittance business? We are witnessing more and more third-party apps being launched to facilitate to send money. As a result, money transfer organizations have been hampered. Will this be the trend that will ultimately take over the existing business model? So the question is, if I understand, what would be the future for the remittance business? We are witnessing more and more third-party apps being launched. Yeah.
Amar, I can try this one. So yeah. I think what we're seeing across the board is the companies that have thrived or succeeded through the COVID period are there, and now there are more that are coming up. And I think this was in another chat as well. Competition is fierce, and I think to Navid's point, what's going to be exciting is that companies need to offer more than just a money transfer service. They need to be innovative. They have really great APIs, be thinking about the sending customer and the receiving customer. So I think the trend is that I think we just that companies need to really innovate to be the best and stay at the cutting edge of the needs. So basically coming up with products instead of kind of conceptualizing products, making sure that they're addressing what the actual needs are and the developing needs post-COVID.
Okay, great, thanks. Naved, do you wanna add anything to this?
Yeah, sure. So what I see is that there are 2 basically mediums of transfer. One is obviously the digital, and one is the traditional, which is your cash pickup locations, etc. And it's apart from the cannibalization and the hyper competition between the MTOs and the regional corridor players, the large MTOs, etc. I would say the end winner is the customer, right? Obviously, because everything which is being done is to make it faster, cheaper, easier, more convenient for the customer to receive his money. What will happen is that I think both mediums will coexist, and cash is here to stay. It's not that cash is going away. There's still a huge dependency on cash, especially in the less.
Sorry, Naved, I think we're losing you. I heard Naved talking about cash. The famous statement, cash is here to stay. There is an interesting comment here I'll read out, and then maybe we'll get some input from the panelists. I think cash isn't going away in the next 10 years, especially in Africa. And that's why my team and I created a solution that promotes cash and also promotes digital. I feel it is a big miss for startups to focus on just being digital. It is not sustainable at this time. Thoughts? Ties in with what Naved was saying as well. We'll try and get Naved back.
Well, I think, I think it's a very sensible comment, particularly coming back to the fact we know cash is still the most dominant way of working. I guess the question is, can you make a big enough business out of digital at the current time? I think generally the barriers to entry for a digital business, and this is a big generalization, are less than for trying to establish cash as well, because you need a lot more relationships for cash, and obviously there's more costs in the business. So I think it all depends on which particular market or markets you're looking at, and undoubtedly there are some corridors or markets where you can make a viable digital-only business. We know it's going to get there, but there's many others where just having a digital option probably means you can only target 10 to 20% of the customer base or the volumes. So that's where I think you really have to do your research and look at the individual markets and corridors and determine whether there's a big enough market for the business model that you have. And actually, if you look at it, a lot of the large digital focused players now, when they started off, they only wanted to do end-to-end digital. And many of them have got digital at the front end, the sending end, but have had to introduce cash-based payouts as part of a portfolio payout options on the receive end. So I think the point is exactly right. It's very difficult to do digital only. If you pick the right markets, you can, but you have to really find those markets. And generally speaking, you need to have as many options as you can make work for you economically for consumers. At the end of the day, the consumer's going to use the service that works for them. So you need to provide those options.
Great. Thank you, Leon. Julie, any comments on this?
No, I think Leon really covered it. Yeah, thanks.
Very eloquently, yes.
Yes.
There is a comment actually from an audience member on digital remittance costs. Maybe you can shed some light on this. So I'll read the comment, please. You said that digital remittance could help reduce the cost of remittances. How do you manage cash in fees with mobile money operators, thinking that cash out only fees are around 2% to 3%? So adding the MTO fees, it should be more than 5%. So this is for digital. So it's more than 5%, the cost for sending money. That's what I think the questioner is saying. So, and that's higher than the average that we discussed, 3-point-something%. Leon, correct me if I'm wrong. Good.
Yeah, the 3.53% was for mobile money, using mobile money to originate a transaction and then to terminate it as well.
Right.
And I think if you included the cash out fees from memory, that increased that 3.53% to, and forgive me if I have this wrong, about just over 5%.
Yeah, that's sounds about right. Yeah.
So the questioner is probably right. And I suppose the point is, how do you get rid of those cash in, cash out fees? Maybe Julie might have more insight, but ultimately I'd say in the longer term, of course, the key is to remove the need to cash out or cash in and make all those payments digitally. And you can only really do that if you've got a strong domestic digital payment ecosystem, so that I can use my mobile wallet to pay for groceries, etc., etc. So, I mean, that would be logically the longer term. In the short term, it might be more of a challenge.
Yeah. Is there a rise in payment gateways, payment processors in South Africa, and how is it in other neighboring countries? Julie, do you see?
I probably will speak about the neighboring countries more, just because South Africa is not much of a mobile money market at this time. I think in terms of, so I'll just maybe speak more about mobile money operators. So those are pretty mature. It's pretty hard to kind of establish oneself in these places where they have some like very dominant players. However, one market, which actually I just found out about over the weekend, which I was really surprised about, which is Senegal, where Orange was the market leader for quite some time. And Wave, which is a relatively new mobile money player, has just surpassed Orange. So it is possible, but from my experience, the players that you have in terms of on the receiving side in mobile money are pretty much established. And then the new players that are more like digital wallets, they're there, but they're not really significant. And I don't know if that's due to marketing or due to just time in market or just brand awareness, but I haven't seen much uptick except for that example in Senegal.
Okay. All right. Thank you very much, everybody. We've got 4 minutes left. Thank you very much to everyone for attending the panel session. And a big thanks to all our panelists. We hope you found the session useful. Our next panel will be starting straight after this session at 11:30 a.m. UK time, which is GMT +1. The next session at 11:30 a.m. UK time is titled Better Together, Building a New Global Standard for the Remittance Ecosystem. So please try and join. After that, we have another session at 1:30 p.m. UK time, New Tech in an Old Business, explore the new products that are redefining the best in class. This session will cover stable coins, cryptocurrency, blockchain, etc. Make sure you don't miss it. If you want to review what has been discussed today, we'll be providing a written summary and video upload of all of today's session at remitone.com and in our next Remitone newsletter as well. So keep an eye out for that. Lastly, thanks everyone again. And please get in touch if there's anything you'd like to discuss regarding the session or Remitone. Look forward to having you again here with us. Thank you very much.
Thank
Ciao.
you.
Thank you, Amir. Bye, everyone. Thank you, Leon. Thank you,
Bye-bye.
David.
Thank you. Take care. Bye.